World Health Organization has already confirmed that the third wave of the coronavirus sickness is the COVID-19 is hitting the majority of African countries. I think for Uganda, this is basically the second wave. We're slightly below the curve or behind the curve. But like what happened last year when infections rose and the first lockdown came, activity was stopped and broken down, and as a result, growth slowed down. At that time, there were no vaccines, so all that was required was, as a safe measure, close up and make sure that spread reduces before you open up and economic activity resumes. Globally, the global average for vaccine rollout is at 28.5 doses per 100 people. That's 28.5%. But for sub-Saharan Africa, it's at about 1.5 doses per 100. Uganda at 1.1, an estimated 1.1 doses given, is at an average of 1.3%, which is still below the threshold. Why are these numbers important? It's important because when people get severe infections and death is when the lockdowns and the restrictions are heightened and increased. When those happen is when the economy or the country is closed down. When the country is closed down is when the economy takes a dip. So if one thing flows into another. Therefore, if we have more people vaccinated and severe infections becoming less, then it does that the more people we can have vaccinated sooner, the quicker we can open up the economy. The quicker we can open up the economy, the more economic activity picks up and the more growth returns to the country. Inflation rates for June came in at about 2%, helped really by persistent food deflation. Basically, there's a lot of food forms a significant part of the inflation basket, and because that was low, inflation basically was low. In the near term, we think that the effects of the lockdown are going to add or maintain that status quo. However, as we move forward and as we go towards the end of the year, we expect inflation may edge up slightly. Why? Because if there's been a lot of spend on health, if transport costs, for example, have increased, and also base effects from the way inflation was measured last year and this year, it means that now if you compare in the future, there's a huge possibility that inflation would edge up. Our economists basically still think that inflation might end the year at about 4.5% for the end of the year. Talking about the currency, it's quite interesting actually. People would think of it as an anomaly. If you think about the rest of Africa, last year we saw huge amounts of volatility in the various currencies. The kwacha, the Kenya shilling, the South African rand, the Nigerian naira, all those had a lot of volatility. Last year for Uganda was very interesting. When the lockdown came at the beginning of the lockdown in March, we saw a spike in the currency. It depreciated very fast and quickly corrected and came down. And since then, it has traded 3,600 and below. This year is even more special. I mean, it has actually strengthened this year, meaning that it is lower. The dollar to the shilling is lower than where it was at the beginning of the year. What has helped it? We have seen a lot of portfolio flows, meaning investors bringing money to invest at treasury bills and bonds market. And what has helped that confidence also is the stability of the currency. You know, it's a chicken and egg. The investors came, brought more dollars, the dollars strengthened the currency, and because the currency is strong and stable, more investors are looking and they're thinking, look, I think it's good to invest. Obviously, there's a benefit we have had from the exports in coffee, diaspora flows. So monetary policy affects inflation and economic activity or the economy generally with a lag. it is not immediate. Basically, the CBR, or the central bank rate, is basically supposed to be an indicator and supposed to help drive certain actions in terms of increasing lending to the private sector and things like that. But it doesn't happen immediately. The cut happened about a month or so ago, and the effect of that is going to still yet to be seen. It's the right move considering that inflation was low, considering that the outlook also for inflation is still below the 5% mark. Is that benefiting yet? Right now, the fact that we have a lockdown has affected us negatively, because if there is depressed demand, if there's depressed economic activity, even the people who run businesses want to be in a hurry to do what? To borrow, because where are they going to borrow to put the money? They cannot import from China. If the malls and arcades are closed, what does that mean? It means that you're going to borrow money. If you borrow money now, you have nowhere to put it, so you hold off on borrowing.